everybody, it's Maggie, your fairy godmother of trading. Well, last Friday we saw the price level hit a high, and then the very next day on Monday it hit the same high and it started going sideways, and all week the price action has hit that same resistance level, not gone above it. So we're in a sideways market. Now, this could be one of three things. It could be the marketplace just taking a breather, relaxing. It could be the start of a new uptrend, or it could be a reversal and the price action goes down. So what you have to do is look for clues before you make a decision on what it's going to do. Never assume what it's going to do. So if I were looking for an up market, I'd look for more money moving into the market, higher trading volume, a little bit bigger candles as it busts through that resistance. Sideways market, I would expect the trading level to stay very even to what it is now, and just small candles up and down, no particular direction. If I thought it was going down, I'd be looking for money moving out of the market, higher trading volume, but more sellers than buyers, and I'd look for candle patterns. Now, we haven't seen it yet, but we probably will this coming week, what's going to happen. So be on your toes for that. Of course, Monday the market would be closed. It's Memorial Day. And as far as looking ahead, I don't think there are many market disruptors out there this coming week. There are a few, but I don't expect any big reaction from them. There might be a reaction from the release of the FOMC minutes. That usually causes a little flurry out there and with traders. If there is, I still don't think it'll be much. It'll be over pretty soon. The biggest disruptor that's looked like it's coming at us is passing the big, beautiful bill. Trump is pushing hard to get it done, and there's quite a bit of, let's say, discussion rather than arguments going back and forth about what to do. So all of that could affect the marketplace. So how'd I do in all this craziness? Well, I had a 6.3% gain for the week. But the thing is that's less than I had been getting. And why is that? It's because the drop of implied volatility. The market is less volatile, therefore the premiums that I'm selling are lower. And I like to sell premiums on the market. It's a little more risky than buying, but what I do is I sell closer to at the money and bring in the larger premium, and then I buy protection a little further away from the money, and it costs me less. So I get to keep the difference in the two premiums. It's been a good week. I had one scare on one of my trades, but it worked out just fine. So I'm going to be indisposed next week, and Tammy, who is one of the traders that trades with me, has offered to teach next Thursday's webinar. Now, she's a fabulous trader, so what she says is important, so I hope you all stay tuned. She is going to be teaching her idea of synthetic trades and how to find them, what to do, how to record them on your journal, and so forth. So thank you, Tammy, and I'll see you all in 2 weeks, and signing off.